Hi everyone. In this video, I'm kind of going to do kind of a putting it all together in terms of kind of breaking down price action, because another kind of key kind of question we've got is I don't really understand how to break down price action. Okay. And that's been something that we've kind of seen from multiple different individuals. So in this video, we're actually going to try and put together kind of like a one step, or I suppose a multiple step approach, whereby we can actually obviously assess the price action. And of course, being able to understand going from a blank canvas to having a fully, I suppose, completed piece of analysis. Okay. Now there's three or four elements that I kind of look at when I'm doing this. I look at multiple time frame analysis. I look at trend analysis. I look at I suppose the raw elements of price action, so being able to note specific areas of interest. Um, Obviously looking at the fundamentals on a side note, should I say, is obviously very, very important as well. Because obviously the news tends to be the catalyst for the banking liquidity that we tend to see in these markets. And of course, then obviously, if we're looking at cyclical reversions or cyclical retracements in markets, i.e., like pullbacks, we obviously have to be able to identify that, note that as well within the broader elements of liquidity as well, how these markets operate. Okay. So on this one here, I've taken a very, very blank euro dollar. I've done nothing with it. I just literally got the chart, typed it in, and obviously this is what we're looking at now. So I generally start that if you're looking at technicals from a kind of a day trading into swing trading perspective, I always do recommend the kind of the first starting block is obviously top-down analysis. So top-down analysis is where you start on the higher perspectives, looking at a broader piece of data. And when you obviously hone in on the lower time frames, your data becomes more magnified, and the range of information becomes obviously much more consolidated. So I suppose in that sense, that's why I obviously generally would encourage people to, even whether it's day trading, swing trading, medium term trading, whatever it is, to have kind of two or three different perspectives. Okay, because the more information you can collect and gather, the better and the stronger your analysis will be. And in doing so, then rather than it being a 50-50 trade of whether it's going to go higher or lower, your information that you're completing and collecting together and gathering together allows you to move that percentage in your favor. Okay. And that's literally the goal here of what we're trying to do is I suppose when we complete analysis that we're moving the odds of this position going higher or lower in your favor. So it's kind of like a casino. When you start off, there's X amount of number of blacks, there's an X amount of number of red dials, and then you've got the two green ones. So if you go into a casino, you will see, if you're playing blackjack, you will see it's not a 50-50 win or lose, because technically it's not. It's so many black ones, so many red dials, and then of course then you've got your two green dials. So in that perspective, the percentage is not 50-50, it's about 46-45%. So over a couple of 100,000 trades in your career, you can see how those percentages on average will stack up. And it's important to, as I suppose, from our perspective, give as much information to obviously help traders to obviously maximize their analysis. And in doing so, when they maximize their analysis, they can obviously maximize their potential trading performance. And that's one very, very important topic to kind of consider when starting out. Now, when we're looking at the charts here, again, I've got this chart here for the last, it's about a yearly chart. So starting off kind of from the early parts of 2021, we can see that the euro dollar fundamentally has been in a very, very significant downtrend. Now, of course, if you're looking at our fundamental videos, we've obviously looked at the DXY, we've looked at fundamentals, we've looked at correlation of markets, and it's important to obviously factor that into consideration as well, particularly from a broader metric. But solely from a price action perspective, it's obviously important to be able to identify the trend. Which way is the trend moving? Is it moving lower? Is it moving higher? And we can see here in this example that the trend, broadly speaking, is just continually grinding lower. Okay, got a little bit of a top here, we've made new lows, we got a little bit of a pullback, made new lows, new pullback, new lows, new pullback, new lows. Okay, so the general theme here is just broader cyclical trending price action to the downside over the last as we said, nearly kind of 12, 15, 18 months now. So we obviously have to be aware of that. Now, I suppose another kind of thing that we kind of want to be looking at is identifying key areas of price action. So using the naked eye, is there areas of interest that we can say is definitively important for price action? Okay. Because at the end of the day, when we look at the markets in the broader sense, or even in the short-term sense, the movement in price action is the movement of an asset up or down in a particular direction. Okay. And on a day-to-day basis, we're confronted by the constant battle between buyers and sellers in the markets, and being able to identify price action areas of interest allows us to break up the charts into smaller pieces of information, smaller chunks, and allows us to, I suppose, focus on certain aspects more than others. Okay. So if I look at this now, I can see very, very clearly we obviously have a top formation up here. I'm just going to minimize the camera at around about kind of 123-ish area. We've obviously got the M-shaped top. We've got a lot of consolidation through July of 2021, sorry, July of 2020 into the early parts of obviously 2021. So we had a very, very clear cyclical back and forth range and price action between these two focal points. So if I was to just temporarily play a replay function and take all this bearish price action out of consideration, you would see very, very quickly that the price action is just up and down between two price points. It's up and down within a range, and it's important to be able to identify these areas. So therefore, it allows us to say, well, price action is moving laterally. Okay. So there's three phases of price action that you will get in the markets. Okay. You will get bullish trending price action where the markets are trending higher. You will get consolidation price action where the markets are effectively moving in a rectangular area. Okay, so it's basically up and down between two price points. And then, of course, when the reversal comes, you'll get the bearish, and of course, then you'll get the new wave of bearish price action. So that's ultimately kind of the next kind of key determinant in that. Now, in this example here, even if I draw the rectangular area, you can see very, very clearly price action is moving laterally. Okay, so we've made new lows temporarily, we've made new highs, we're back and forth, up and down within this range between 116 broadly and this area around 123, 123.50. So within July of 2020 to September of 2021. So if I just get that across, get my date and price range across, we can see that that is a, broadly speaking, 6-7% range, including the wicks, and it's a range that's held for over 460 days of price action. So again, you can determine very, very quickly that markets, albeit maybe in shorter term cycles, is obviously battle between buys and bears, or buyers and sellers, in the broader consensus is moving laterally up and down within this range. Now, it's only when the price action is effectively taken out these 116 areas here that we have an idea that the price action is obviously looking to move lower. Now, structurally speaking, within the price action, it's obviously important to be able to determine how the markets are moving. So what we've actually seen here is, right, consolidation, price action breaks out. We get multiple days of retesting this area of interest here, this key price action area. And then, of course, what happens as a result, the markets ultimately unwind and the markets continue declining lower, because that's effectively now we've had the bullish trend. We've had this consolidation for 461 days. We've broken out through the lows. We've pulled back to retest, and the markets are now continuing this wave of bearish price action. So we've effectively broken through, and is creating this new trend of price action. Now, of course, if we follow that across and just kind of follow the price action as it's emerging, as I said, it won't always be moving higher or lower, because sometimes even within the trends, you will see periods of consolidation. So after we broke out, we kind of retested, we consolidated, and then we broke through. So you can see here, we have a short-term probably price action area around 115. Markets obviously break down, and then it becomes conducive to consolidation. So then you'll see liquidity on the upside, you'll see liquidity on the downside, you'll see liquidity on the upside again. And these are what's called distribution phases. And basically what's happening here is after a strong impulsive move, the markets are going to accumulate more volume. And they do that by inducing participants into the markets by maybe representing an idea to go long or go short or whatever it is. And then as a result, then when it's accumulated enough volume, it'll start to go again. Okay. So if you're looking at this, you will see this short-term consolidation very, very quickly. You'll see kind of short-term consolidation. Notice again, we've kind of made this sweep of liquidity in the highs. We've made initial impulse, then we've made a down impulse. We flagged back up to this area here. Okay, if I just get my brush, you can see that their area here, price action creates of what would technically be seen as a kind of a double top in a trading pattern. And then we've just completely unwound. Now, again, we've another very, very sharp impulsive phase or expansion phase on the downside. So this is obviously accumulation. This is the distribution. And then, of course, this is the expansion phase where the markets actually shows its hand. Now, beyond that, then what happens? Well, if we follow the price action, we can see again, structurally, short-term pullbacks, kind of consolidation, and even here as well. Okay, here again is another very, very similar example because we've got consolidation. What happens? Well, structurally speaking, we have another short-term bottom here if you were looking at the lower price action levels. And we've got consolidation, multiple rejections, price action fakes as if it's going to break through, obviously trapping liquidity. And then, of course, we get the rejection. Price action breaks through the local lows or the local bearish order flow, and we continue moving to the downside. So again, here, if I just highlight my region of interest, you can kind of see it there, kind of lows here, price action breaks through, another retest, another short-term liquidity move on the wick. So if you look at the wick, price action wicks up, tries to probably again trap, take liquidity, and then ultimately starts unwinding. So that's a very, very clear and ominous sign of the price action. Now, at this point in time, we can see here, if you just kind of zoom out, we can see we've gone from the higher time frame consolidation to the short-term movements in price action, and you can see how the order flow is still very much bearish. So we've got lower highs, we've got new lower highs, we've got a short-term retest, new lower highs, and the price action now is forming another short-term set of lows here in this region at around about 103.50. So we can see the gradual inclination in bearish price action, bearish trending movements in markets. And then as a result, then we can clearly assimilate that into a logical scenario, a logical bias from a market research, market analysis, but also from a trading perspective. Okay, so if we follow that across now, kind of just following the market as it kind of develops, we can see here again, we've broken through the local lows, very, very similar move. Okay, so if we look at this, we've obviously consolidated, very, very sharp breakout. Then, of course, we get a little bit of consolidation, but we do get that rejection of this area. So again, structurally speaking, look what happens here. Price action comes back up to the level. You will see this quite often. Okay, you will either see a pullback and rejection of a price action level, or you will see a move like this, where the price action comes back up, breaks through it initially to take liquidity from a market making perspective, and then ultimately unwinds to test the local lows and potentially break through. Now, in this example here, we've made new lows. In this example here, we've come back down to test these lows, and we're kind of seeing a little bit of chop, a little bit of volatility in the markets, both up and down, because at this point, we now have approached parity. Now, from a fundamental perspective, parity in euro dollar has always been a very, very important level, particularly when the euro dollar has gone from 123 to consistent lower lows, lower highs within the trending price action to this parity level. Then you're obviously going to see a lot of volatility. So you're going to see chop, you're going to see movements up and down very, very quickly. And I suppose it's important as retail traders that we try and not get sucked into this as much as possible. But I suppose have a clear mindset, have a clear viewpoint, and then be able to rationalize entry positions off the back of that. Now, again, parity, as we know it, is a very, very key area of interest. We had the initial rejection of parity. We've now kind of come down and we've played a lot of consolidation, up and down, accumulation of volume at parity. Now, of course, if we fast forward it, look what happens. The price action ultimately breaks through parity in the last number of days or so, in fact, the last kind of 7 to 10 days or so of price action. And we've obviously made new lows. So if we look at this again, you can see here that this area of, I'm not going to even call it a specific line because you've got that much price action here. You can see that there's been a lot of price action around this parity level. Okay, parity has been very, very key. Chop, volatility, and then all of a sudden we get the breakthrough. Okay, so normally, again, as always, the fundamental catalyst for it, there will always be they will always rationalize a piece of news or fundamentals for the rationality for this moving in a certain direction. So as traders, we obviously have to be aware of that. And of course, then as a result, we've continued to trend lower. We've continued to make new lows. We've all this now we've gone from parity, we've cleanly broken through, and now we've made a new set of concession lows here at 95, 50, 96. Okay. Now, again, if you look at the 4-hour charts, you can see that accumulation around parity. The false break impulse have moved to 102, back into parity, and then all of a sudden, bang, we've broken through. We've continued to grind lower. Now, at this point in time, are we going to get like what we've seen in previous circumstances, like, for example, like here, and of course, even here as well, where we get a pullback? Do we get a pullback into this 99 parity level, maybe to allow the next wave of bearish price action? At this point in time, it's a little bit early to tell, but from a higher time frame perspective, it could very much occur that would be maybe a logical scenario over the next couple of weeks. Okay. And this is only just a one time frame. Now, we obviously did look at the 4-hour chart initially, but obviously if we look at the 4-hour charts again, you can see how the price action kind of just breaks it in. So if I look at the highs, you can obviously see the bearish price action as we come into this 116 level. Of course, you can see it there as well. 116 consolidation takes to the highs. You can see that stop hunt, very, very sharp move in liquidity. And all of a sudden, the markets are back at the lows, breaking through into this consolidation. Okay. Again, similar to what we talked about earlier, we had the consolidation impulse to the upside, back into the lows, flags back up in the 4-hour. And of course, if you're looking at the 4-hour, you're obviously focusing on the more recent movements in price action. So that's going to be continually the narrative going forward, that generally speaking, whether you're scalping, whether you're short-term trading, medium-term trading, day trading, swing trading, whatever style of strategy that you're looking to employ, I would always say kind of use 2-3 charts, because obviously the more information that you can collate and collect, the better and the stronger your analysis will be. And it should all about, from a trading perspective, it's all about trying to build as many confluences as possible. Okay. And the more confluences you can build to give you a certain bias or viewpoint, the stronger that analysis will become. And that for me is one of the most important things in trading, is building those confluences, building I suppose all of these entry criteria or structures that you're looking for before you obviously go and implement trading a trading position. Now, of course, 4-hour structure here again of 111-ish. You can see the price action rejection, the kind of the engulfing of this initial wick, but again, holding structure. And of course, then we get the third move higher. So we've got the first phase, pullback, second phase, pullback, third phase to new highs. All of a sudden, we roll over again at key daily area, takes out the structured lows. Again, you can see the liquidity here. Look at the liquidity, local area of liquidity here, very, very quickly. And of course, you can see the price actions rejected it, tried to break through it, liquidity sweep. And of course, then we've ultimately unwound, broken through the lows at 107. And then we've continued on our merry way down into these lows here. So what's happened as a result, looking at the price action, you can see very, very clearly sell off, consolidation, continues declining into 103s. And then all of a sudden, we get that kind of rally through the summertime back into this area here between 107.50, 108. Now, again, on the 4-hour structure, if I was to just draw a rectangular area across, you can see how this has gone from a short-term area of support or a price action structure to obviously a new area of resistance. So, and when we've come back up, price actions obviously remain above it. Remain below it, should I say, and has continued to accumulate, consolidate until such a time that ultimately the price action breaks out of this short-term consolidation here. Okay, and ultimately unwinds back into these lows. And I suppose that's the clear thing here, is just kind of clarifying the price action, making things as simple as possible for yourself before obviously executing trades. Now, if I look at this 4-hour chart here, or even focusing on maybe, let's say, the 1-hour chart, just to give us again a deeper insight, what's happened? Well, what's happened is the price action is ultimately broken through this area here, 99 to kind of parity level. Okay, we've sold off very, very sharply into this, I suppose, negative flag structure. So this is generally what I would call a negative flag. So we make kind of short-term bearish order flow, new lower highs consistently. We generally engulf the new lows, and then all of a sudden we get that very, very sharp snapback to the other side. So that's an atypical negative flag. Now, with a negative flag structure, this is generally what I kind of look for, kind of 1, 2, 3, and then look for that impulsive move back up, one more move of liquidity back into the downside, and then see if we can kind of garner some sort of short-term pullback to the upside. So from my perspective, obviously we've negative flag, which is obviously cleared out. We've made the first initial impulse. Now we're creating bearish order flow. So I think now we're trying to create this set of phase of price action. So it's now a case of, well, how does the price action react off the liquidity? And for me, looking at the liquidity is kind of the area where the last selling candle was contained or was witnessed or observed. And for me, that is probably going to be somewhere in this region here, okay? And that's obviously from a price action perspective. You can see very, very clearly this obviously is the lows. We've flagged up. Do we get kind of a relief rally back into this area of interest? Now, again, so this is just solely from a price action perspective. So what we've done in this video is we've looked at the multi-time frame analysis. We've looked at the trend analysis. We've identified different and important price action levels on different time frames to, I suppose, broaden our understanding, broaden the viewpoint. And of course, now we're looking at the liquidity element. I suppose within the liquidity element, we're looking for these types of structures. It's not about what all other retail traders are doing. You want to be looking at the contrarian viewpoint, because I suppose the retail traders that are broadly successful are the ones who look at the markets very differently to the vast bulk of all other retail traders. And I suppose that's fundamentally what's important here when it comes to setting up these charts. So I suppose that's where we are in this one. Taking those kind of three initial components, I think, is very, very important, because it's a very good starting block, very good starting base to go from a very, very, I suppose, small start or blank canvas to having a fairly decent logical understanding of where the markets have become. Now, again, if you go back up to the higher time frames, we've started with a blank canvas. And if I go back up to the daily for a second, you can see very, very quickly how the markets have developed, all our different areas of interest, all our price action perspectives, looking at the trend analysis and looking at the multiple time frames as well. All right. Thank you, everyone.